There are several different types of stocks to invest in. Today, I'm going to discuss dividend stocks. Have you ever went to a store like Winn-Dixie, CVS, AutoZone, any of these stores that give out reward points or reward cards that you can redeem later for something free as long as you keep on spending money with that particular store? Well, in a nutshell, that's how dividend stocks work. So, dividends or shared profits are given to the investor as a reward or as a benefit for investing in the company. Another way you can think about it is a bank giving you interest every month just for keeping your money in the bank. Now, a couple of characteristics about dividend stocks. Dividend stocks are usually well-established companies, your Walmarts, your McDonald's, your IBMs, Microsoft, companies that have been here for years and are not going anywhere, your AT&Ts, pretty stable companies. So the other aspect that I'm going to lead into is a result of them being stable. If you're stable, you're probably not going to have a sharp incline or decline in your business. Things will just steadily grow or steadily decline. We hope that they're growing. So you're not going to get the benefit of a 40-50% gain typically with a dividend stock. However, you will get the benefit and peace of mind of knowing that these companies typically do not go out of business, and typically they do not get rid of their dividend. The dividend is what keeps the investors' money into their company. So they're more concerned with sharing the profits with you so that you can keep your money in the business so that they can keep using your money to operate and to expand their business and just keep it stable and growing. Now, there is another aspect that's a beautiful thing about dividends. Now, I know you've heard me say that stocks is a way to accumulate wealth over time. With dividends, this is so true. This is powerful. Now listen. So, on a quarterly basis, which that means every 3 months, the company will report their earnings. That means what they've earned outside of their revenue. They've paid their overhead and everything. The money that they've earned for you, the stockholder, excuse me. So once they report that, they'll issue what's called a dividend. A dividend is given in the form of stocks or it's given in the form of money. So however many shares you have in a company, whatever the dividend is declared at, it's multiplied by how many shares you have. So as you can see, the power of dividends is the more that you invest in the company, the bigger your dividend will be. Let's just say, for instance, I had 10 shares of Walmart, and Walmart gave $1 dividend every 3 months. Typically, you don't get as high as $1 every 3 months, but for sake of this example, $1 every 3 months. So I had 10 shares. So just for keeping my money there, every 3 months, they're going to give me $10. Now, if I choose to get more shares, that dollar gets multiplied by the shares that I have. Now, let's say I have Walmart for 5 more years. Then that's every 3 months for 5 years, $1 times however many shares I have. You look down the road 20 years later and you're getting checks that are massive just for keeping your money there. This has nothing to do with the stock profiting and declining because you're still going to benefit from the stock gaining too. If you bought in at $20 and it's $30, you're still up $10. And the benefit to it is every 3 months, they're going to keep giving you money to keep your money there. Dividends are powerful. I know investors who only invest in dividend stocks. I myself am not. I'm kind of diversified with my portfolio, but I don't have anything ill to say about a dividend investor. Warren Buffett, for instance, he's a dividend investor and he's a value investor. He has stock in Coca-Cola. He's had stock in Coca-Cola for over 50 years. Last year, his total dividend payment was $8 million. That has nothing to do with the stock. That's free money that Coca-Cola gave to him to keep his money in their company. So when you get to thinking about passive income, it's almost like magic. It's almost like compounding interest. Actually, when I first really got the epiphany of a dividend, it was too good to be true. That's how it felt to me. But then I started getting the dividends, and I started seeing them hit my account that this is free money. I didn't do anything to get this money other than keep my money in their business. So I can multiply this by buying more into the business. Who wouldn't want to do that? It's incredible when you think about it. So the other thing with dividends is, like I said, they're typically stable companies, so you'll have time to keep reinvesting. Now, I know we all talk about having that drip, but the drip that you really want is the drip in the stock market. DRIP, Dividend Reinvestment Plan. What they do is you can opt for saying, hey, like Beyonce said, pay me in equity. You can just say, don't give me my dividends in cash. Give me my dividends in stock equivalent. So now I'm just, the dividend that you're giving me, let's say I got $50 worth of stock in dividends. Then I put that back in there, then that just multiplied my dividend even more. It's a crazy game, but it actually is free passive income for you. Yeah, of course you're spending money to invest in the company, but you're getting those reward points. Like if you had a Winn-Dixie card, now you can get a discount on gas or something like that. Those truths hold the same with dividends. So let me know what you think about that. Are you interested in dividends? Comment below, like, and subscribe. The Idea Factory, LLC. And get that drip, the real drip in those dividends. Peace.
Come here, let me coach you. This is your first class. Look how they approach you. We make the first last. Come on, make a toast to the way we birth cash. They say we flashy and fly. They call us